Hey everybody, it's showtime. I hope everybody's doing good. It is a better day. We've had quite a few good days in a row right now. We're going to dig in as to what's going on in the world. Why is suddenly everybody flipping bullish? Stock market analysts, Time Magazine on crypto, on-chain analysts, etc. So let's just jump in and hope. Time Magazine on crypto. Yes, we got audio and it's fixed. Thank goodness. So let's jump in and talk about Octa today. Are we in a breakout? That is the question. So, and as usual, edutainment, never investment advice. It's not what we do here. So first of all, we'll start with the good news. We've got good old Clint Eastwood and lots of good news today. And we always start where there's the bulk of the actual content. So the good news. So first of all, this was Time Magazine, and it took me a little bit by surprise. And they said crypto winter could be over if Bitcoin's price does this, according to one expert. So the net crux of this is basically they believe that if Bitcoin stabilizes, the price stabilizes over the next 2 weeks, the prolonged crypto bear market could be over. And it could be over as quickly as it started. That sounds a little too good to be true, doesn't it? But let's dig in and see if we can support that with some on-chain data. But this information is according to somebody called Edward Moya, a senior analyst at a firm, I think, called Oanda. And Wall Street is also in a much more positive mood. Things are beginning to look very attractive from a pricing perspective. And people begin to suspect, yes, the Fed may flip dovish, less hawkish, which means they may ease or slow down the rate at which they're increasing interest rates. Anything like that would make the stock market go straight up. And many people say it will be led by Bitcoin. So we'll see. Remember, though, there are still some gray clouds, and we'll get to them at the end of this presentation. Second thing, let's talk about this on-chain stuff from Glassnode. Big thank you to the team at Glassnode. This is about the realized price and the number of days that the realized price has been negative underwater. So according to on-chain analytics, the realized price or the on-chain acquisition price or the cost basis, whatever you want to call it, of the Bitcoin supply on aggregate is currently 22,092, and the spot is 23,327. So we are now above realized price. When this popped up, many people were kind of underwater. But the question is, now that Bitcoin has rallied, are we out of that level where it was actually 35 days is the little green strip on the right-hand side compared to other cycles that had much longer amounts of time in the bear markets. So I think it was March 2020 was just 7 days, very short, and things rallied back. We had about 301 days in 2015. And I don't remember the other timeframes, but you can see the net crux of this. If you look at the green bars, obviously in 2015, it was very, very long. It got shorter in 2018, 2019, and super short in the C19 crisis, and maybe shorter again. But my thesis has always been markets are always trying to front run everybody. There's much more asymmetry of information out there. And there's bots and algos and hedge funds that are trying to get ahead of everybody. So things like dips, they crash faster and they rebound faster. That's why I always urge people to make sure they are on the train when the train leaves the station, because if you miss the train, you can miss huge gains. We've seen many crypto assets, top 20 crypto assets, go up over 100% in just a week or two, which is quite staggering. So that is the realized price on chain, which supports the thesis that we could be coming out of the bear winter, which also supports what Time Magazine just said. Now, another piece of good news. This is the Fear and Greed Index. After 74 days in extreme fear, we just made it out. That was a new record, ladies and gentlemen, and yet another quiver in your arrow. So getting up to that 30 level takes us out of extreme fear to fear. We're still in the fear mode. And this push is really affected by strengthening momentum in the markets, stock market, crypto market, Ethereum bullishness, and overall sentiment is improving. So coming out of that extreme fear territory is a good thing. And we'll see where we go next. So again, 74 days in extreme fear. That's the longest tour we've all ever had in history in this space. Let's talk about another piece. This is Bitcoin wallets. It's greater than 1 Bitcoin. It's kind of hard to see, but the yellow line is the amount of wallets greater than 1 Bitcoin holder. This does not mean that there are nearly 900,000 whole coiners, because many people have multiple wallets. And we've done many exercises to show the number of whole coiners will never exceed about 350,000 people. And we will do an update of that if people are interested. To drop a comment below. There's been a lot of change. There's been a growth in the 10,000 plus whales lately as well, which means they're taking away a lot of whole coiner potential. Obviously, Sailor, every time he buys, he's taking whole coiners away, etc. So that's why in 2021 I was very big on that, despite the fact many people just made their whole coiner in 2022 because of the low prices. So every cloud has a silver lining, as they say. And remember, we'll see. But what this actually does show as well, the true believers in Bitcoin are holding, and the distribution is getting a lot wider. And we'll see what happens. I think the total number right now that have held for longer than 6 months is about 77% of the total supply. So it's good. Again, previously I said the weekends have been flushed out. So let's talk about stable coins as well. When folks move into stablecoins, it's like risk off. But now, we're looking at this for weeks as well. Now stablecoins are being deployed, which is perfect inverse correlation to Bitcoin price. When the blue line goes down, the yellow line goes up. The blue line is the stablecoin balance. The yellow line is Bitcoin price. So another quiver. What else do we got? So digital asset inflow. Every week we look at the money flow, follow the money. And here, it's been very stable, very much like last week. Total inflows were about 12 million. I think 15 million the week before, I'm not sure, but it's still positive. So we'll take that as a win. Long Bitcoin saw outflows about 2.6 million, I think. And everybody's still sometimes buying the short Bitcoin, but that is positive. And let's drill into the assets themselves and see exactly what's going on. And here we saw, again, after 3 weeks of positive inflows, Ethereum saw minor outflows of about 2.5 million, ending that 3-week run. And before that, they had 11 weeks of outflows. So we'll see what happens. And from a flows perspective, obviously the stalwart during this whole season, this whole year, has been Solana. They had 500,000 going in, and everybody else is kind of negative or flat. Multi-assets, Bitcoin drainage, Ethereum drainage, multi-asset had a combo, which is predominantly things like Cardano, Polkadot, Solana, etc. XRP had $300,000 of inflow as well. So a lot of bullishness around XRP because of the SEC lawsuit. But apparently they've spent $100 million or something like that in legal fees over the last few years, which is a staggering amount of legal fees. Now let's talk about some more good news. Even though when the hash rate drops, the network security may fall a little bit. That is not good, but it does make it more profitable for miners to operate when the hash rate falls. And we are now back at March 2022 levels, which is good because miner profitability was a real issue. Many miners had to shut down their rigs, not only because of stress on the grid, the electric grid system, places like Texas, but also wasn't profitable to mine with older equipment. Now they might be profitable again. So it's good. So miners can hang around a bit longer and make some money. Now, this was an incredible chart that I came across, and this is incredible how the price of Tesla used vehicles has gone up. It's gone up $5,500 more than what it was in the previous 90 days. And that's over 5x, excuse all the fives here, it's not by design, over the next highest car, which I think is a Genesis and then a Pontiac and a Porsche. But all these are, used car demand drives price. Used car demand is really high again, or getting higher or up over what it was 90 days ago. And part of that is because car manufacturers are having a tough time supplying vehicles. And everybody is dying to get their hands on a Tesla. They simply can't. They can't wait a year. So what they do is they go to a secondhand market. And I know people that ordered Teslas, paid full MSRP, and then flipped them immediately for $10,000 more than they bought them for. So that's just the power of a company that doesn't have to pay anything for sales and marketing. The stuff just sells itself. So bullish for Tesla, earnings soon. We'll talk about that as well. Now, another good news. The hits keep coming, but they're positive hits too. This is what I call domino news. This is French banking giant BNP Paribas said they would offer Bitcoin and crypto custody services. That's good news, especially for a French company to do that, French bank. The problem is, apparently, if you read the fine print, they just have the same crap with a different name. And I think it's something like that when you deposit your crypto with BNP, they are able to use that crypto in custody as collateral for trading activities. Who's going to do that these days? I think we've all learned our lessons. Remember, not your keys, not your coins. Never, ever, ever, ever deposit more than 10% in any one of these facilities, and only do it if the return is more than 6% or even a lot more, as we've learned, as the risk is catastrophic. So in more kind of domino news, this UFC fighter, Luana Pinheiro, she decided to take her full salary in Bitcoin at the UFC. And what I wanted to share with you guys was kind of the quote that she said, which I thought was very touching. She said, think about it. It takes an average of 10 to 15 years for an individual to obtain a black belt in Brazilian Jiu-Jitsu. And so my time preference here is just as long, if not longer, for things like an investment in Bitcoin. Everything else is just noise to me. So she believes in Bitcoin. Her partner believes in Bitcoin. And with Bitcoin, she can secure her future, and she doesn't mind waiting 10 or 15 years for the price. So I think there's a lesson there for everybody. So well done to her. Now, switching gears to the bad news. Not too much bad news today, but we will talk about this. Then we hinted at it before, and that is the Bitcoin STHs, which are short-term holders, have been flushed out. They are short-term holders are on the pink graphic here, again from Glassnode. Thank the team for that stuff. And their thesis is for strong market recovery, analysts need to monitor whether the short-term holder in profits swells rapidly. And if that happens, that typically means we're going to rally out of a consolidation range. Now, an event like this has followed every major bear market floor as investors who capitulated transfer their coins to new buyers with a lower and less price-sensitive cost basis. And again, apparently, per this chart, all the pink is gone. All the short-term holders are gone. It's just long-term holders and kind of OGs in the space left right now. And that is what's required for a capitulation event or to signal the end of a bear market. And the reason that is here in the bad section is because I feel bad for the short-term holders that were forced to sell. Otherwise, it would be in the good news section. In addition, miners, we knew they dumped a ton in June, but miners dumped 25% of their total holdings in June, which is a stunning amount. And that is the public miners, not all miners in general. But they had massive Bitcoin sales in May. But in June, they sold about 14,600 Bitcoin, which is 4 times as much in May. And remember, miners only produce about 3,900 Bitcoins a month, which means they sold 400% of their production, ultimately draining their holdings by 25%. So again, miners only, many of them are trying to hodl Bitcoin as long as they can because they know it's number go up technology. They just need to wait it out. But it shows you how tough it's been for them to pay their bills. So they've had to sell a truckload. Now, in ugly news, before we look at a few charts, a recession it is. The GDP model now estimates real GDP growth, seasonally adjusted rate in Q2 is 1.6%. And this is as of July 19th. Down from 1.5% on July 15th. And this is because of things like housing starts and a whole bunch of other stuff. I think residential investment growth decreased by, it's in double digits now, 10% or something, which again, a huge part of the US economy and economies all around the world. When I talk about the US, the same thing is happening all over the world, UK, Australia, Europe, in most places. But the home business has ground to a halt. Sales have ground to a halt in most markets. And here we are in a recession. Q2 on the books, pretty much guaranteed. But it doesn't mean the markets are going to tank. And so far, the earnings for stock market has been very, very good. So watch this space. Now, a little bit of stock market news. And this was a cool chart from Charlie Below, which I wanted to share with you all. And after 6 months, in this market in 2022, the worst start in 50 years, folks are wondering, should they ever invest again? People are losing faith, losing heart. And yes, I always say investing, stock market, etc., trading is a blood sport. And if anybody, by the way, zoom out here, if anybody wants me to analyze every day in the stock market, every week, every month, how much it goes up, how much it goes down since about 1870, I can do that. Let me know if that's of interest, because again, as I always say, stock market goes up the majority of the time. I can prove it to you with numbers if you're interested. But because of inflation and the impact it has on purchasing power of the dollar over time, The chart below illustrates the erosion of what a dollar can buy over the years and how the stock market has not only kept pace with rising prices, but crushed them in terms of performance. So here, if you look at since 1950, S&P 500 went from about 180 to nearly 4,000, which just fell down a little bit, but it'll be back up there again. And while the dollar purchasing power of $33 would have bought you $400 worth of goods in 1950, or put another way, the $400 in 1950 has lost 92% of its purchasing power. So whichever way you prefer to think about it, that is crushing since 1950. 92% of the value of the ability of that dollar to buy stuff has fallen by 92%. So, and in addition, we had some news as well from Robert Kiyosaki. He said he's waiting for Bitcoin to test $1,100. And I have no words for this. This guy's all over the place. I think a few days ago or a few weeks ago, he said Bitcoin would go to 14,000, then 9,000, then now it's 1,100. So don't wait for Robert Kiyosaki's limit to hit, because it's not going to hit. All right, a couple of charts today. I'm going to touch on a couple of things. Going to look at a few pairs. ETH to Bitcoin, little Bitcoin chart action too. Sol, ADA, MATIC, Google, Amazon, and Sol ETH. And also plant some more lessons in this section. So people ask me to do more chart stuff. So here you are. Bitcoin broke the 200-week moving average, which is a huge psychological barrier. It tapped it. I always talk about tapping glass. It tapped it 3 times, 4 times. I can't remember exactly. The 4th time it broke through, and that was today. And here we are. We are just above it. Now, what typically happens after a major resistance line or something very psychological like the 200-week moving average, that can flip into support. So watch that space carefully. We'll see. If it does drop below 23K, it could go down a lot more. And again, we're not out of the woods. We don't know, but there's so much positive signs, and a lot of it is psychology of investors. And if everybody feels bullish and positive, and the media and the rags and the TVs are all saying positive things, brings people back into the market, and that train can go very fast once it leaves the station. In addition, ETH whales have returned. There's 131 more ETH whales added in just 10 weeks. This is from Sentiment, and this recovered really well. Ethereum has just been on fire. I can't remember what it's up now, way over 50% just in a couple of weeks or a couple of days, up 14% in the last 24 hours or something. And additionally, there's an incredible amount in that key of people that hold between 1,000 ETH to 100,000 ETH. And that's grown by 131 new whale addresses. So you can see big money or big holders are buying. It's not reflected, though, in the follow the money institutional funds, because maybe this is just big whales buying in anticipation of the move to proof of stake on September 19th or before. So that's good news. Now let's look at the ETH Bitcoin pair, which is on a tear. Excuse the poetry there. Oh, it keeps going. I think I'm trying to be like Guy from Coin Bureau, but I'm not. That was all accidental. But however, the remarkable recovery is seen here in ETH. An enormous 40 to 50% move in just a week, pushing ETH above that $1,500 level. I think it's about $1,550 right now as I speak. And the ETH Bitcoin pair has climbed to 0.07. Remember, the old place where I used to hang out a lot was 0.08. We're kind of close to there back in April, and then it fell down to earth. And here we are now at levels we have not seen since the middle of May. And we are exactly at the 200-day moving average, which is the blue line I have on the chart there as well. And we went up from 0.052 to 0.067 in just a few days. That's a massive pair move of over 25%. So we'll see. Now, depending on where we are, I think it is possible that Bitcoin may need to catch up at this stage. Ethereum, after such a big move, might take a breather, and then Bitcoin will go up on a tear next. So we'll see, and we'll watch everything very carefully. But it did look like that Ethereum was stalling out on the charts as well today. Another view of that ETH Bitcoin pair with the Heikin-Ashi candles. You can see those amounts on the days. Just that 7 or 8 days has been absolutely rocket propelled, and that's how quick markets can move nowadays. So again, remember to try be on the train, and don't wait for limit orders from Kiyosaki of $1,100. This is the Sol ADA pair. I added that big blue arrow because I spotted this. And it's one of the many pairs I watch religiously to find out if there's an ARB opportunity, because again, everything mean reverts. And I reckoned, I think when it was around 60 or 59, I said, oh, this is completely out of whack. It hasn't been down here in a long time. So it's time to offload one and load up another if you had those types of pairs. And here I reckon the market cap flipping will happen around 92 to 93, maybe even 91, depending on how things go. So we're going to watch that carefully too. I hope people are following me. Now let's talk about MATIC. You guys know also I'm big on daily active users on a chain. These numbers are quite incredible for MATIC. And this happened before the Disney announcement as well. But if anybody wants a daily active user by chain update, let me know. I did one a few months ago, and it's time to do another one, especially looking at this chart and how the MATIC chain went from being kind of quiet for a long time to just exploding in the last month or two. Now, projects like MATIC also have recovered hugely from their losses. I think MATIC went up 63% in a week, and the address activity is quite stunning. And it is also showing an intriguing divergence. And as I say, traffic matters. So, you know that people say sometimes price follows hash rate or hash rate follows price. I believe price follows growth in daily active users. That's mine. Heard it here first. So we'll see. But again, if anybody wants a DAU report update for all the chains, I can do that as well. Let's talk about Google versus Amazon, because this is a key lesson here as well that ties into DCA. Both are up exactly the same amount over the last 5 years, but on different paths. So the Heikin-Ashi is the Google, that's the red and the green, and the gold is Amazon. You can see Amazon flew a lot higher, a lot faster over the last couple of years, but they've both come down to earth at the same time, and they both did a 20-for-1 stock split nearly at the same time. There's just too much coincidence here. So somebody asked me a while ago if I had to wager over the next 5 years, which one would perform better? And my money is on Google. There you go. Not investment advice, but that's where I am personally placing my bets. So not saying Amazon's bad, but I think the allocation that I have is a lot higher for Google than Amazon. Let's talk about, though, Amazon and what it means in terms of DCA versus lump sum. This is a cool chart from Econometrics, and they had a really good article on how to bet on an exponential trend. Think Bitcoin, think crypto. These are exponential assets. But if you had bought into, I can't really see these numbers, but I did add some arrows because it is a bit of an eye chart. But over the previous amount of time since they came into existence, up to 25 years ago, if you invested lump sum in Amazon at the beginning, same amount versus DCA, if you invested lump sum, you would have made 102,400% on your investment. If you DCA'd in, you would have made 390% on your investment. Again, both over 25 years. So the lesson here, everybody, as I always say, get in early, get in hard, be on the exponential trend before anybody else. That's where the money is made. And having crazy market crashes like we've just been through, also a good opportunity to go in hard as much as you can. So I just want to share that bit of history, and thank you, Econometrics, too. So with that, everybody, breath of fresh air. Thank you all for being here. Thank you to the mods in the chat, and I'll see you all tomorrow. I appreciate everybody. Thank you, Teddy Yoon. And let me figure out how to turn this off. See ya.